Hey guys, welcome to another video brought to you by Total Control Traders. If you know others that may benefit from the content we provide, please consider retweeting and sharing our channel. We're very much appreciated. All right, we're going to get into the market. Keep it short today, short and simple. If you haven't seen the Saturday's video, make sure you check it out. Saturday's market deep dive as well as hottest tickers. Nothing has changed since then. The outlook, the forecast still remains the same. Both theses, we are looking at new all-time highs right around that 4K to 40.50 before next pullback. And on the next pullback, we're going to get a better idea of what this going forward is going to look like. Now, I am still remaining in bear positions. Not a whole lot. Just about a quarter to a fifth about of the sizing. But now I am going to be skipping this last leg up. Still the same. Nothing's changed. Just because when I look at the charts and when I look at all the other indicators, not getting a sense of too much follow through, even if we were to break bull going into new all-time highs. So that's why I personally decided I'm going to have some bull plays here and there. So right now, for example, one of the ones I'm in is ABNB. And that one, the chart looks nice. So I'm going to remain in that one for a little bit. But let's take a look at the market. So 4 hours. End of Friday, we ran hard into that all-time high zone. In between here, these two, that is the all-time high zone. As I mentioned before, on the all-time high zone, I am going to use resistance lines as opposed to the zone that we've been used to. So it just stands out a little bit better. And into Friday, we saw a rejection right at that bottom of the zone. Going into aftermarket, pre-market of today, we saw a harder rejection with 4-hour bull flag setup, and then opening of the market, we saw further pullback before, it was a little bit of, let's see, what's 7:30 look like? 7:30, I can't quite remember. Okay, yeah, so we did have a little bit of run before a further pullback, then further running into breaking over that Friday's high. So the outlook still remains the same. We are looking up at new all-time highs. If you are playing SPX bulls, that makes sense. One thing to keep in mind is the chart that we've been looking at, the QQQ-IWM. This week is going to be the week to determine where some sectors are going, what direction of this sector, specifically, of course, the NAS and the Russell, as the chart is NAS over Russell, QQQ over IWM. So this week is going to be key, whether we're going to see follow through on the bounce from the trend line. Now we've broken over that weekly 8, but we have not broken over last week's high yet. Last week, a little bit of a red flag because we did get over it quite a bit, and then we ended up closing right under that weekly 8. Today, great start for the bulls to the week so far. So far, we have gone over that weekly 8, but we're going to need to first thing break over this last week's high. On this chart, if this week is bullish and the confirmation of this bounce continues, I would anticipate further upside to come. However, if we see a fake out rejection from, trying to find the level here. Yeah, this actually last week's high is a key level. If we see another rejection, hard rejection from here, I would expect on the next leg down to break under the trend line. And what that means is we will be looking at a repeat of this kind of pattern. Now it's not gonna be a to the T where things are the same, because we already have a bigger upwick on to the upper side. But regardless, it'll be the pattern that we're looking for if we were to reject from that key resistance again. Then coming down, the next support we'll be looking at is 1.22. So that is the SPX, that's QQQ over IWM. So with QQQ IWM, you got to keep in mind there is two factors that affect that specific chart. which being NAS as well as Russell. So today we saw a decent follow through on the QQQIWM chart. Not so much from the NAS, but more so from Russell. As you can see on the daily, NAS didn't have too much of a move. Okay, we had actually had a decent drop before nice dip buying coming in. Bull volume not too significant. It is increasing, so that looks nice. We still are stalling. We still are stalling in that key zone that must break over for bull confidence. The problem with this now is if we're to break over the next little while, let's say we break over this key zone to break, there is that key resistance trend line as well as the new previous support trend line in confluence that's coming up. That could be generally when there's a crossing, it's either going to be a very strong support resistance or very easily broken. So over tomorrow going to Wednesday, it's gonna we should get a direction on NAS. But going back to what I was saying about QQQ over IWM, today's move on QQQ over IWM was not from the fact of NAS movement, because there was, what is this, like, let's see, 0.05% move. It was more so from Russell rejecting from that daily 8. This was a big rejection. We saw a move of minus negative 2.7% with decent bear volume. Now, this bear flag, so this is a very weak bounce from a bull flag, a bull divergence so far, meaning my anticipation is we will likely see further follow through from this bear divergence. But let's see where that higher low is. I believe we held the GP today. Oh, we didn't even get to the GP yet. So we're right around that 0.5. Tomorrow should be a telltale sign whether if this is going to be a higher low or whether if this is going to be a lower high. So keep your eyes on Russell. There's going to be a play even if you're late. I am still looking at most ideal entry around this GP, which lines up with the previous key support resistance right at around 2265. We'll be going bearish around there on Russell. Aside from that, if we're to break down from here, I want to see a close under this trend line. Then I'll consider re-entering bear position on Russell. But with Russell, it is very noticeably weaker now versus any other market, SPX, NAS, or Dow Jones. Now, Dow Jones, I believe we closed at new all-time high. Well, no, not new all-time high, but new all-time high close. And see, earlier today I was looking at this, there being a stronger at that point, a stronger bear divergence on the daily. Now it's a little bit weaker because of market bouncing. Even so, the last time we had a daily bearish divergence was in January, on January 21st, 2021. From there, we had a 5.21% drop. That is from a daily bear divergence. That was the last decent pullback before the February one. February 16th, where was it? Oh, wow. That actually didn't have much of a pullback from the February consolidation. So make a note of it. Be a little bit more cautious on Dow now. It is only consistent of 65 tickers, though the index should move a lot easier. The key support remains at this zone in between 31,993 to 32,146. All right, and that's it for the Dow. Gonna take a quick look. I believe I was looking at, okay, yeah, US dollars. Notable break. And this is part of the reason why I am remaining bearish on the market. Why is there so many zones? Give me one sec, guys. Okay. So we never broke down under this key zone Saw some support here, not a whole lot here. Resistance, resistance, another two resistance, and then became support on the upper end, support on the lower end. So we never broke down under this key support zone. And now we are trading over. This is weekly. So this was the first key break. Then from there, we saw a back test, immediate break above the trend line of the channel, and then came back, lost the previous high by a little bit right here, but getting bought up. And now we are passing that key support, key previous support right here. 1, 2, 3. It depends where you draw it. 4, 5, 6, 7, 8, 9. There's about 9 supports from previously. So this 92,824 was one of the key to break. And then the one following that, there's going to be a bit of a range from here now to 93,725. Gonna need to see a little bit of follow through tomorrow, but this was a key break today, closing over that resistance. A little bit of a daily bear divergence, nothing too significant though. However, do take this as a main warning sign for the market as US dollar rises through the resistances. Okay, so that's it for the market. Let's get into the hottest tickers. First one, Bitcoin. Now on the requested tickers, we do have HIVE, which we're going to go over. Just note that HIVE is underlying asset is cryptocurrency, and cryptocurrency, a lot of them are going to be laggard or linked to Bitcoin. So if you're looking for a HIVE, if you're looking to forecast HIVE or do a technical analysis on HIVE, sometimes it could be better to just do a technical analysis, a TA on BTC Bitcoin. So with Bitcoin, we are back at that upper trend line, previous resistance of the channel. Chart is still relatively strong. Bull volume still looks nice. Again, it just defies bear divergence after bear divergence. So we had a bear divergence here. Didn't have too much of a correction. Didn't even touch backtest this previous high of 42,000. Instead, we just went bull and make a new all-time high again and made another new bearish divergence on the daily. Didn't have too much of a pullback either. Came very close to the GP, and now we're seeing a bounce again. Bitcoin remains strong. Defies a lot of what TA would tell you. So market for crypto remains extremely strong. Just I would say, be a little bit cautious in the sense that because a lot of we're seeing now some big firms, big financial systems allowing their clients to get into crypto, as well as Tesla buying Bitcoin. So that could be part of the reason why it's propping the market up. And the reason why I say be cautious is if they pull the plug, you don't want to be the one left with the bag holding. So just be cautious. Take some profits along the way, especially when you're seeing daily bear divergence coming up. Even with a little bit of pullback, at least you're securing some profits, right? Okay, next one is Tesla. I think I got the wrong note pulled up. Give me 1 sec, guys. Right, Tesla. Still holding that GP, but it is looking weak. We did break under 600 today. We are still holding that key zone. Upon the loss of this key zone between, why is there so many prices? 574 to 598.78. So the low end of 574. I will be looking down around that 400 price mark. The next zone down between 406 to 460. As you can see, upon the break of this, There's not a whole lot. In fact, there's quite a few gaps. There's not a whole lot of supports on the way down until you get to this previous stall zone, this previous demand supply zone. Previous supply likely to become demand zone from there. Okay, so Tesla, you'd rather be late, even if there is a move from this lower trend line of the channel, long-term channel. Ever since February of basically the pandemic time, long-term channel, even if you were to see a touch of here, be a little bit cautious. It's okay to be late on this. Upside, there is quite a bit, even if you were to get in around 650. Let's see, so this could be an ABCD pattern. So let's say even if you were to be late on 650, you can be looking up at new all-time high around 900s. So no FOMO, trade with patience. Next is TLRY. Still relatively weak, but still holding that key support. Holy, 3 days now, 1, 2, 3, closing right on it. So tomorrow should. So remember how I said, for those of you that didn't watch Saturday's video, market deep dive video, over Monday, Tuesday, Wednesday, we should get a very clear direction as to where TLRY as well as APHA are going to go. So keep a very close eye on it. See if it breaks bear or bull. This decreasing volume looks very nice. It is set up for a move. Next, PLTR. So I was looking at this chart today because it is very noticeable relative weakness to the market and steady bear volume, nothing noticeable. We are still hovering around that 37 RSI, nothing noticeable either, but upon the break of $20, so the first support is around 21, that key zone, the bottom of the key zone, but the key support is going to be $20. The last low we found was 20.18. 20 is going to be that psychological. If we break under 20, there is going to be a lack of support. There's multiple supports, but lack of strong supports till all the way down to the new IPO, where we saw a little bit of a stall around there. So there's lots of upside, lots of downside. Have your stops ready. You don't want to be caught in a downtrend, especially given where the market is at right now. This upside wise, risk to reward is 113%. Wait, what is that? 24 bucks. Downside wise, you're looking at about 11 bucks. So risk to reward is not bad, I guess. 1 to 2. Roughly about 1 to 2. This is a very nice area for a bottom fish play. I just don't like the fact that we are breaking under and staying under this trend line from previous resistance, then became somewhat of a support before becoming very choppy around it. So seems like we're just hovering around this trend line right now, but that $20 must hold. Low risk entry, $2 risk to potentially, even if we were to go to GP, let's say, $2 risk to $11 upside. So risk to reward 1 to 5, not bad. Next is TME. Can never trust these names, eh? China names. We did see a follow through somewhat. We gapped up, but then from there we sort of sold off, and then it was just a slow grind up. Nothing exciting. Holding that already 8. That is key guide from here. You're going to need to see the hold of that already 8. Ideally see a follow through tomorrow. We're going to need to touch that 88, but keep in mind, we could just drag the 88 down to meet. Next is Wayfair. Don't like that rejection. Another rejection right around that same mark as last time, 355. Today's high was 354. No significant bear volume though. No divergences. Chart still looks okay. Holding that 88. We are extended from the weekly 8, so that could be potentially the reason. Weekly 8 remains the guide right now. Monthly, regardless of how this closes into the month, unless we're closing, back into the red, which I don't really see, I do look at this chart as decent confirmation on the monthly bull flag. Next month should be the month that we see nice follow through on Wayfair. And next month, I might make a decision on the position. We've given it 2 to 3 months already. And as a test for leap year options, so far, not really a fan of it. I saw a profit of $3,000 and then went down to negative 200. Saw a profit of 1,400 and then went down to break even. So, even if we were to just go with commons, looking at this, going with commons, that'd be up 100. I don't think I nailed the bottom here, but regardless, that'd be up, somewhere around $80 per share already versus these leap year options that are just chopping around, doing nothing. Even if, let's say, I got in February instead of January, that's still another $56 per share already. So, gonna have to see a decent move to make it worth my time on Wayfair. Next is, we get a couple others. So that's it for the hottest tickers, but there's a couple others I wanted to go through. Top watches, Airbnb, noticeable strength today. Even with the market, while the market was pulling back, we are seeing a little bit of a rejection from the daily 8. The bounce. So we didn't even touch the 0.382 yet. I would anticipate a further follow through tomorrow. The bull volume is outweighing the bear volume, so that looks nice. Hold of the GP. I like where the chart is at. Bull divergence as well. The chart's looking nice. You don't want to see that follow through relatively early. Tomorrow going to Wednesday. I want to see a break over that 88. All right, next is Facebook. Relative strength way early on, straight from market open today. You can see buying pressure. Was it 30 minute? Yeah, 30-minute algo. It was just gap up and then sort of went sideways a little bit. Was it extended on? There we go. With extension on, gapped up, sideways, touch 30-minute 8, bull flag confirmation, touch 30-minute 8, and then we started confirming before the end of the day a little bit of a sell-off, profit taking. So if you swung from Friday, this would have been a 3% move. Congrats, Facebook bulls. This was a beauty. From the call out of the back test on Thursday, I called out that Friday, if you see another touch or a double bottom of this wedge upper trend line, you want to be taking an entry. It'll be low risk. From there, we're seeing 4.7% already, but we're going to need to see confirmation tomorrow, breaking over this next resistance, 291.78, and the trend line, ideally day after or tomorrow or day after, closing over this next resistance, 297.38, for confirmation of further bull action. Let's do HIVE. Requested ticker is HIVE. Does it look similar to Bitcoin? That's a question. That's okay. So it actually looks a little bit weaker than Bitcoin. Monthly chart doesn't look that great. Bear divergence on the monthly. And then weekly, we were forming a weekly bull flag until last week where we broke down under the weekly 8 with slight increase on bear volume. So that's not very nice. But essentially the RSI is correcting itself a little bit back to the norm now. We had a weekly bear divergence as well on this new high. So the pullback has been very decent considering the monthly and weekly bear divergence, essentially we are still holding that GP. So GP is must hold. If we close down under, I would anticipate further downward price action. But as the way it stands right now, it looks like the consolidation has been more than strong. Would anticipate if you start seeing a curl from here, would anticipate further upside to come. Remember, Bitcoin remains strong regardless of the bear divergences that we have been seeing. And let's see, score got a pump today. Saw some nice bull action. Holding, essentially, we wanted to see a hold of that GP. Now this inverse head and shoulders is still intact. We're going to need to see follow through tomorrow going into Wednesday. Nice bull volume so far. Keep your eyes on score. If this confirms, first sign by breaking this trend line, next by breaking this trend line, following that we're going to be breaking this key zone, then it's going to be a free run all the way up to GP. So score is looking like a very nice setup. Want to see that confirmation tomorrow going into Wednesday. All right, that's it for today's market recap video. Keep your eyes out for tonight. Continue part 2 of ticker review video. Don't forget to give a thumbs up. If you're looking for that financial freedom and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. And remember, the best compliment you can give is by spreading the word about our channel. Also, check out our website and Twitter. Website at totalcontroltraders.com and Twitter at _TCTraders_. We offer a subscription model to our chatting platform where trading ideas are shared, charts are reviewed live, as well as my personal trade call-outs with the most recent result of 90% correct between March 1st to the 15th. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.